Well, if it isn't my favorite topic, the Canadian real estate market. You know, it's funny, because just when you think you've got it all figured out, something comes along and shakes things up. So, what do we need to know about the Canadian real estate market in 2023? Grab a cup of coffee and let's dive in. So, what's the latest scoop on the Canadian housing market? Well, the market has been experiencing a downturn since March 2022, but it seems like it's finally on the road to recovery. And if you're wondering if the market has hit rock bottom yet, the answer is no, not quite. According to Royal Bank of Canada's recent economic analysis, we can expect the bottom to happen in spring 2023. But hold your horses. This doesn't mean that the housing correction has run its course. In fact, RBC is predicting a peak-to-trough decline of 15% in home prices across the country, with about half of this decline still to come. However, there's some good news for sellers out there, as the average home price has increased by 8% compared to last month, reaching $662,437. This is the highest level since June 2022, and all provinces saw their provincial average home price increase compared to last month, according to the data released by the Canadian Real Estate Association, or CREA. That being said, the national average home price is still down by 19% year-over-year due to the impact of higher Canadian interest rates seen over the past year. For buyers out there, the forecast means that it may be a good time to purchase a home if they have the financial means to do so. With the decline in home prices, buyers will have the opportunity to purchase a home at a more affordable price. However, buyers need to consider their financial situation and whether they can handle the potential increase in mortgage rates when the Bank of Canada begins to trim down its key interest rate in 2024. But let's not forget, the Bank of Canada, which has been closely monitoring the housing market and its impact on the broader economy, has recently signaled that it may begin to raise interest rates later in 2023, which could have a significant impact on the housing market. Higher interest rates would mean higher mortgage rates, which could make it more difficult for prospective buyers to afford a home, and could lead to a further slowdown in the housing market. Now, I know what you're thinking. What about the sellers? Well, the forecast means that they may need to adjust their expectations for their home's selling price. With the decline in home prices, sellers may need to lower their asking price to attract buyers. It is also important to note that the housing market recovery will be slow, and sellers may need to be patient and flexible with their selling strategy. Ontario, British Columbia, and Alberta will experience a peak-to-trough dip of 19%, 16%, and 6%, respectively. But let's remember that this decline only offsets some of the immense home price gains between late 2020 and February 2022. RBC states that the dramatic swing in the market since March 2022 is a cyclical event, marking the transition out of highly unusual circumstances, a global pandemic and exceptionally low interest rates. Structurally, the market is sound. Sales during February 2023 are down 40% year-over-year, but there was an increase of 41.6% from last month when Canadian home sales were at a 14-year low. The slowdown in home sales nationwide has significantly moderated since the fall of 2022, mainly because housing activity is already deeply depressed in most markets. This leaves little remaining downside, except for a major economic recession. The housing market recovery will slowly begin later in 2023, especially with affordability issues and the weakened economy holding back prospective homebuyers. The pace of recovery will gradually pick up in 2024 when the economy stabilizes, market inflation softens, and the Bank of Canada begins to trim down its key interest rate imposed in March 2022. Furthermore, I must emphasize that the Canadian housing market is still highly regional. The decline in home prices will not be uniform across the country, and different markets will experience varying levels of correction. For instance, Vancouver, Toronto, and Victoria will likely see the most significant correction, while cities in Quebec and the Atlantic region will be more stable. Thus, it is crucial for home buyers and sellers to research and understand their local housing market's trends and conditions to make informed decisions. Another aspect to consider is the impact of government policies and regulations on the housing market. The Canadian government has implemented several measures to cool down the housing market, such as tightening mortgage qualification rules and introducing a foreign buyer tax. While these policies may have contributed to the recent decline in home prices, they can also create uncertainty and reduce demand for homes, especially from foreign buyers. The government's stance on housing policies and regulations will continue to play a significant role in shaping the housing market's future. On a lighter note, let's talk about the bizarre and hilarious side of the Canadian housing market. Did you know that in some Canadian cities, you can purchase a house for less than a used car? Yes, you read that right. In Cape Breton, Nova Scotia, you can buy a home for as little as $1. Of course, these properties may require significant renovations and repairs, but it's still an incredible deal. On the other end of the spectrum, some of Canada's most expensive homes are nothing short of extraordinary. In Vancouver, there's a $35 million estate that comes with its own private lake and beach. Meanwhile, in Toronto, there's a $50 million penthouse with 11 bedrooms and 16 bathrooms. I don't know about you, but I can barely keep up with cleaning one bathroom, let alone 16. All jokes aside, the Canadian housing market is a serious and complex issue that affects millions of people. The current situation may seem bleak, but it's not all doom and gloom. The housing market's recovery may take some time, but it will eventually stabilize and pick up pace. It's essential to be patient, informed, and realistic in our expectations, whether we're buying or selling a home. The Canadian real estate market is a dynamic and ever-changing industry that requires constant attention and analysis. While the recent decline in home prices may have caused concern for some, it's essential to look at the bigger picture and understand the underlying factors that drive the market's fluctuations. As a financial expert on this topic, I recommend keeping a close eye on the housing market's regional trends, government policies, and economic indicators to make informed decisions. The Canadian real estate market in 2023 is full of opportunities, challenges, and surprises. It's essential to stay informed, be creative, and have a sense of humor when navigating the market. Whether you're buying or selling, remember to keep things in perspective and enjoy the journey. And always remember to work with reputable professionals who have your best interests at heart. With these tips in mind, you'll be well on your way to finding your dream home or investment property in no time. What do you think about this topic? Share your thoughts in the comments section below. Don't forget to like, share, and subscribe to this channel. I'll see you in the next video.